Hi, everyone. This is Mike Bernard. Glad that you could join us here on session 5 of Mic'd Up. Let's get right to it. One of the things I want to talk about today is a federal U.S. sales tax. Now, I know most of you know that there's sales tax at both the state and local level, and most every country outside of the U.S. has both corporate income taxes and individual income taxes and taxes on wages. But the U.S. does not have a federal sales tax, and it's not likely to have one in the near term. And what I mean that over the next 5 to 7 years. And the reason that is because the current taxing system at the federal level actually funds the government relatively well, except for the deficits that oftentimes the overspending creates. So, again, not likely to pass. There's no support for it in Congress or the White House, and you're not going to see that. But I think what's important today is for you to understand some of the particulars of it, because we do get asked this question about what would it look like if it ever did pass, or if it ever got some momentum in Congress and the White House to actually pass it. So first of all, this bill has been introduced. It's HR 25, so 25 in the House of Representatives. It's called the Fair Tax Act. It's been introduced every Congress since the year 2000. It's never gotten a floor vote. It's never gotten out of a committee. It has a few sponsors, but it's, like I said, unlikely to pass. But here's what the particulars are. First and foremost, what it does is it would replace the corporate income tax, the individual income tax, and Social Security tax and estate and gift, all at the federal level. Now, all of those taxes combined would raise currently today about $4 trillion. The Fair Tax Act, which would be a sales tax, would actually raise the same amount. So it would actually be kind of revenue neutral. So it would raise $4 trillion. Here's some of the particulars around it. First and foremost, the rate is 23% on all goods and services. So in addition to between the 6% rate that most people are paying, or 10% in their jurisdictions, you pay 23% on top of that. That'd be the first thing. Okay. The second thing is that it does have some exemptions, mainly like for financial instruments. So if you bought stocks and bonds, there wouldn't be a tax on that. For state governments, if they had to buy, if they were subject to the tax, they don't have to pay the tax either. The other thing it does too is it charges the states, which actually collect and remit and report the tax to the Treasury. I can tell you this: the states today have no capacity to do something like that. They are just as busy as they can to actually collect state and local taxes, transaction taxes today. Given the support, it doesn't have much support on a political level. It just simply is not. You're not going to see something like this anytime soon. And with all of that, now you're all mic'd up.